Namaste, good morning. Welcome to the session 1 of our revision. Well, before going into the session, some aspects about revision classes. We are planning 10 sessions. Ideally, 12 would have been great, but 10 sessions we are planning. Last 4 sessions are dedicated to international taxation because out of the 30 marks, our intention is to score minimum of 20 and let's go and try for 25. So last 4 sessions are completely dedicated for international taxation. So that leaves us with that international taxation sessions plus your amendment. You will clear your examination. Plus this sessions of taxation, direct taxation, which is spread over 6 sessions, where we are going to recollect the provisions, some case laws, how to approach the questions in the examination, all these things. Focus will be definitely on the questionable areas, on the areas where the examiner will look for testing you. Focus will be on that and on the areas of wherever there were small amendments. Okay, I wish that our amendment classes or our amendment lectures are there fresh in your mind. Let's not waste time. Let's go in and understand or revise this chapter. Some ground rules include: number 1, I am not going to even ask you one question on these things. I'm just going to work out. I'm just going to share whatever it is. If you have any doubts, if you have any queries, okay, you can definitely stop me and ask, or you can later text me. I will definitely try to answer the queries, or we can have the discussion later. Purely examination approach. I don't have any intention of taking you into the opinions and other things. Purely examination approach in which we are going to go. Just keep working the solutions, okay, along with me. Try to practice the questions, try to practice the provision. We are going to try to recollect what I would say. We will be covering almost 70 to 80% of your question paper. That's what I believe we can do in the revision. And the other factor which I want to highlight is if at all there are any network aspects, just text me. I have to change the network because it is really unstable. And let's go ahead and take up the revision. The first topic which we are going to revise is PGBP, profits and gains of business or profession. Because this, once I revise this topic, we can do all types of assessment. Okay, PGBP and capital gains, once we revise, we are completing major types of assessment questions also along with it. So the first topic I am going to discuss this morning, or we are going to start the revision, is directly on PGBP. Provisional understanding, that is, understanding the various aspects which the chapter is saying. That's what we are going to start with. We are going to start with understanding income. Income in PGBP is said in 2 sections. Section 28 and Section 41. Repeating, income is set in two sections, Section 28 and Section 41. So I can say that this is going to cover Section 28 and 41 with its own relevant case laws. With its own relevant case laws, it is going to cover. Okay. As I was telling you, I had to retrieve the material with enormous difficulty, change things. So there will be line errors, or what I would call alignment errors, etc. Because the system got crashed. Almost whatever problems possible before having classes, I had everything. Okay. And I had to go for the second dose. So that also put brakes. But beyond that, I'm sure that we will be able to, with your help, we will be able to cover well. So do not take the printout of the material right now. I'll tell you. So how are the items that is going to be understood? We are going to see how these are going to be treated. If at all there is a question which has an adjustment, how these items are going to be treated. I start with subsidy received as general contributions. There are two provisions which speak about subsidy. Okay, subsidy is specified in Section 28 and ICDS. ICDS 10 is also speaking about subsidy. Okay, there are two provisions. One is a section, another is a disclosure standard which speaks about subsidy. When subsidy is spoken, they are classifying subsidy into three, or for our understanding, two. Okay, subsidy received or identified and received towards a depreciable asset should be reduced from the cost of the asset. Subsidy received towards a depreciable asset should be reduced from the cost of the asset, whereas any other common subsidy, general subsidy, should be taken as income, even if subsidy is towards a non-depreciable asset. Land subsidy vanda kuda, okay, that should be taken to income. Subsidy received as a general contribution will be treated as income. Okay, this will be treated as income. So subsidy received as a general contribution will be treated as income. This will be treated as income, my dear friends. Okay, whereas subsidy received towards construction of hospital building, subsidy received towards construction of hospital building is a depreciable asset. Okay, according to Section 28 and ICDS, where subsidy is towards a depreciable asset, the same needs to be reduced from the cost of the asset. Okay, the same needs to be reduced. Where it is towards a depreciable asset, it should be reduced from the cost of the asset. Hence, the subsidy received should be adjusted with cost of building. Okay, in this case, it should be adjusted with the cost of the building because it is identifiable with a depreciable asset. It is identifiable with a depreciable asset. Okay, right. Progressing. Okay, the same items are here. Compensation received for breach of contract. All types of compensation are considered as income for the receiver. Breach of contract, okay, non-supply, all these things, okay, compensation for managerial change of agreements, change of the agents, all these things, all type of compensation, okay, shall be treated as income. Section 28 says all types of compensation will be treated as income. Will be treated as income. Compensation received for failure to supply plant and machinery. Compensation received for failure to supply plant and machinery. Here we are looking at this Saurashtra Siemens case. Here we are looking at this Saurashtra Siemens case. Okay, here we are looking at Saurashtra Siemens case. Liquidated damages received from a company from supplier of plant and machinery for failure to supply the plant and machinery within stipulated time. For failure to supply within stipulated time, where the compensation is directly linked to an asset. When the compensation is directly linked towards an asset, then it should be adjusted with the cost of the asset. Then it should be adjusted with the cost of the asset. Compensation received. So, if there is an adjustment in the question, that there is a compensation which is with regard to an asset. Okay. 75% of the time, I believe you will remember Saurashtra Siemens case law was scenario. I don't remember the case law, but I remember the provision. Clearly write in a recent case law or in a popular judgment. This is what has taken place. So, you will reduce it from the P&L account. This is not an income, and reduce it from the cost of the asset. Remember to reverse depreciation. Remember, if they have already charged depreciation, if you are going to charge, then reduce and compute. If they have already computed the depreciation, ensure to reverse the depreciation. Okay. In Saurashtra Cement case, it was held that where compensation is linked towards an asset, then such compensation should be adjusted with the cost of the asset. Then such compensation, so in Saurashtra Cement case, they held where it is linked towards an asset. Then such compensation should be adjusted with the cost of the asset. Okay. But otherwise, all compensation will be treated as income. Similarly, for the payer, it will be treated as expenditure. Non-compete fees, income. It will be treated as income for the receiver. There is one scenario where it is popularly argued, if the non-compete fees is for profession, then it is like sale of an intangible asset. It should be taxable under capital gain. Is one of the popular arguments that still happen. But as part of section 28 itself, now non-compete fees is brought around. So in the examination also, if they ask for non-compete fees, please take it as income and you will be right. Okay, do not worry. Export incentives. All type of export incentives are income, like duty drawback. Okay, duty drawback, sale of import entitlement license. Okay, sale of import entitlement license. Okay, DEPB, it's a passbook. Okay, etc. are all treated as income. So in the question there might be an adjustment that export incentive received which has been taken into balance sheet. In that case, take it as income. If they have said that there is an export incentive which is treated as income, you just write a note that all export incentives are income as per section 28, hence the treatment is right. Everything should have a note. Everything should have a note. Remember the ground rule, state the obvious. In examination, the ground rule is state the obvious. Okay. Payment received by a partner from the firm. We all know remuneration and interest which are allowed under section 40B shall be treated as income in the hands of partners under this head. Shall be treated as income under PGBP. Okay, remuneration and interest which are received by a partner will be treated as income under PGBP. What quantum, etc. Once more, if you want to revise, we will do it in assessment of firm, or when we do the popular questions, we will do that. But generally, you have to remember that for the partner, remuneration is not salary, interest is not IFOS, remuneration and interest which are allowed. So if there is a disallowance, then whatever is the portion that is allowed will be treated in the hands of the partners under this head, that is PGBP. Under PGBP. Am I clear to you? So if I look at section 28, okay, இதுதான் உங்களை maximum challenge பண்ணலாம். One more thing will be there. I will do this and come back to the other things. Travel expenses incurred by the principal company or principal company. Okay, travel expenses incurred by the principal company for achieving target. Okay, this is also, we call it as under section 28 as perquisite. Under section 28, this is known as perquisite, like this: gold coin received, okay, or any other gift received for achieving target, okay, any perquisite received, whether convertible into money or not, whether convertible into money or not, shall be treated as the income of the receiver, okay, of the receiver. Any perquisite, whether convertible into money or not, shall be treated as income for the receiver. Okay, okay, any perquisite. Perquisite nale non-monetary benefit. Okay, so majority of the time it is a non-monetary benefit. Any perquisite, whether convertible into money or not, will be treated as income in the hands of the recipient. In the hands of the recipient. So it will be considered. Okay, so in the adjustment, it could be that you received a gold coin, okay, in a scheme, okay, which is not considered in the above income. So they will give you the fair market value of the gold coin. Please treat it as income. Please treat it as income. Okay. Second, it could be that they have considered it as income, then say that the treatment is right. Okay. If I can sum up section 28 once before going into 41. Section 28 and 41 are the two sections which speak about income. Section 28 and 41 are the two sections which speak about income. If I can recollect section 28 for you, it will be profit and gains of business or profession carried on during the previous year. But there are some exceptions, we all know. Then if we come to it, compensation, all types of compensation or business income. Okay, speculation income is a business income. Then our partner's remuneration is a business income. Whatever is the partner's remuneration paid, which is allowed and paid. Then non-compete fees is a business income. Perquisite is a business income. Export subsidies are received or considered as business income. Okay, so these are all part of business income. So this can only be adjustment. This can only be an adjustment that either they have considered it as income, in which case you have to write a note that the adjustment is right, or they have not considered as income. You need to just write that this needs to be considered as income and add it to your working. So this is what section 28 is. Okay, in terms of examination adjustments only, these are the things covered. As I told you, apart from section 28, there is a section called a section 41, which speaks about deemed income. And the section or the crux. What is the crux of that section? Any expenses, allowances allowed earlier, now recovered, it shall be treated as income. Even if it is recovered by the successor of the business, it will be treated as income. Once more, section 41 says any expenses or allowances allowed earlier, now recovered. Okay, so ஏதோ ஒரு expense allowance which has been allowed earlier, now recovered, it will be treated as income even if it is by the successor of the business. Amalgamation happened. The transferor claimed it as an expenditure, transferee recovers it, income, like that. That is the crux, bottom crux of that section. It's a addition stuff. Okay, sale value of asset used for scientific research or specified business. I would have claimed it as an expenditure when I purchase an asset for scientific research, or when I purchase an asset for specified business, I would have claimed it as an expenditure. Now I am selling it, I am getting some money. Any expenses, allowance, losses claimed earlier, now recovered, will be treated as income according to section 41. Okay, the sale value will be treated as income. According to section 41, the sale value will be treated as income. However, waiver exception, where the sale value exceeds original cost. ரொம்ப rare. Up to original cost only I would have claimed it. So where the sale value exceeds original cost, then such excess is taxable as, not that it is exempt, taxable as capital gains. So then such excess alone is taxable as capital gains. According to sections 41, the sale value will be treated as income, where the sale value exceeds the original cost. Then upon the excess matra will be treated as capital gains. Then such excess will be treated as capital gains. Okay, so bad debts recovered. Munnadi claim பண்ணிருப்பேன். That is why, okay, it might be at interlevel, just bad debts recovered. We always write the note, it is allowed earlier, if it is allowed. If it is disallowed earlier, now it is not an income. If it is already disallowed, now it is not an income. Any expenses, losses, allowance claimed earlier, now recovered. If it is not allowed, then it is not an income. Bad debts recovered shall be treated as income provided it is allowed earlier. Always take the assumption that it is allowed earlier. Let them say it is not allowed. Otherwise, please take the assumption that it is allowed earlier. Okay, it is allowed earlier. Okay, now coming to the most important, I require your attention here. Okay, not that other places you can sleep, but generally I require your attention. Waiver of working capital loan taken from a recognized financial institution, bank or anything, the interest portion. Waiver of working capital loan taken from a recognized financial institution, principal portion. Okay, just to recollect, not now, don't refer it itself, I'll recollect. Okay, waiver of loan, we have a map which has 3 branches. We have a diagram which has 3 branches. Waiver of term loan, waiver of working capital loan principal portion, waiver of interest portion, be it term loan or working capital loan, the interest portion. Waiver of term loan. Term loan is normally got towards an asset. Term loan is normally received towards an asset. The waiver of the term loan will also be adjusted with the cost of the asset. The waiver of term loan will be adjusted with the cost of the asset. Whereas working capital loan is for the regular debtor, stock, etc. The waiver of working capital loan principal portion will be treated as income. The waiver of working capital loan, okay, right? The law says waiver of any trading liability. That is the word the law uses. Waiver of any trading current liability. Okay, waiver of any trading liability shall be treated as income. Waiver of any trading liability will be treated as income. Whereas when it comes to interest portion, I asked you to be little open up and see. Okay, because fundamental line, any allowance, expenses, losses claimed earlier or allowed earlier, now recovered. What we have done for interest portion is section 43B. Section 43B would have disallowed this interest. Okay, please understand, when it comes to interest portion, in those respective years, section 43B would have disallowed this expenditure. So now they are waiving off this interest, will not be treated as income, because originally I have not claimed it as an expenditure, for now to be taken as income. Okay, so I am writing a little detailed answer. Interest due but not paid within due date will be disallowed under section 43B in those respective years. Interest due but not paid, I would have disallowed it in those 18, 19, 17, 18, whichever year it pertains to. In those years, I would have disallowed. Okay, in those respective years, I would have disallowed. Okay, where the financial institution waives the interest in the current year, that is your year, the same shall not be treated as income as it is not allowed earlier. So now it will not be treated as income. Now it will not be treated as income because it is not allowed earlier. So please remember, if they have credited it in the P&L account, interest waived by the bank on a trading liability or term loan, whatever it is, if they have credited it in the P&L account, you need to remove it. You need to remove it. Okay, the reason is simple. Okay, if only whatever is allowed earlier now recovered, it will be treated as income. Whatever is allowed earlier now foregone, it will be treated as income. Interest was never allowed earlier, so it will not be treated as income. It will not be treated as income. What does the terminology cessation of trading liability mean? Specify with example and their treatment. Is this provision applicable for the said assessee or for the successor also? Successor also, okay? Cessation of trading liability shall be treated as income. For example, where creditors are not paid, okay, then the same will be treated as income. Accountancy, it is known as write back of creditors. Okay, in accountancy, this is known as write back of creditors. So it will be treated as income. Okay, where the creditors forego their money, forego their liability. It can happen during this COVID times that the creditor accept for 70%, 60% of the amount due. Where the creditors are not paid, then the same will be treated as income, write back of creditors. This provision is also applicable as it is for successor of business. Okay, successor of business, I have given you one ground rule. Provisions will apply to the transferee entity as it would apply to the transferor entity, as if the amalgamation, demerger, conversion has not taken place. Provision will apply to the transferee entity as it would appear to the transferor entity as if conversion or as if amalgamation, demerger or conversion did not take place. So cessation of trading liability, it will be treated as income. It will be treated as income. Okay, so the best example you can give is creditors write back. Creditors write back. Okay, can I quickly summarize section 41 also? Okay, section 41 says any losses, allowances, expenditure claimed earlier. Claimed here means allowed. Okay, claimed earlier, now recovered, shall be treated as income. Bad debts recovered. The best example is bad debts recovered. Sale value of asset which are claimed as deduction. எங்கெல்லாம் asset deduction we will claim scientific research, specified business. In these cases, I will claim the asset itself as a deduction. I will claim the asset itself as deduction. Now, if I sell it, whatever I get is my income. Over and above original cost means that will go to capital gain, rarest of the cases. Creditors write back. where creditors are not going to be paid, then okay, we all know that it will be treated as income. Creditors write back, cessation or foregoing of liability by creditors will be treated as income, Then any trading liability foregone will be treated as income. However, one exception is interest. Why it is an exception? Because the first line says any expenses, losses, allowances claimed earlier. Claimed means allowed. Okay, section 43B would have disallowed the interest because it is not paid within the due date of filing returns. So when it is foregone, when it is reversed, it will not be treated as income. So that interest portion alone, write a clear note. Okay, this is what is repeated in the examination. You take 25 papers and see also this is what is repeated. Okay, the examination is not asking something very new. Even let us give a leverage of 10% of new. 90% of the question would be the repeated same adjustment. So never worry, approach with confidence, you will get it. You will understand it. Write the note very clearly, you will understand it. Okay, right. Assessee, a property company predominantly in the business of letting out of properties and the same part of their main object in the memorandum of the company. The return filed by the company also clearly specifies that the return filed by the company also clearly specifies that the property income being the main source declared in the head business or profession. Okay. So how does this come? Where am I coming to? I am coming to a case law called Chennai Properties and Investments Limited. Okay, Chennai Properties and Investment Limited, where there are two conditions which are mentioned to say whether the income received is house property income, letting out of some properties and earning income, whether it will come under house property or business income. Two conditions, please specify those two conditions. That's more than sufficient in Chennai Properties case. Condition number one, the main object of the company should say, that the company's business itself is letting out of properties. The company's business itself, we all know that the primary object, okay, the main object of the company should say that their main business itself is letting out, okay. The second thing is predominant income should be from that. Predominant, that is at least 50% plus, but this I'm not giving as a ground rule, but generally predominant income should be from that. If these two conditions are satisfied, it will be treated as business income. If these two conditions are satisfied, then it will be treated under the head business or profession. The rental income will be taxable under business or profession. This is coming under the first case law, that is the Chennai property and held by the Supreme Court. If the memorandum of association clearly specifies in their object clause as letting out as their main source of income, main object, and then the rental income from such letting out will be taxable under PGBP. Okay. In Chennai Properties and Investments Limited, it was held that if the main object, we can also write primary object. Okay, why primary object? If it is not a company, partnership entity, again they will write primary object. If it is held that if the main object is letting out, okay, letting out of properties, okay, your house, all these things, okay. If the main object is letting out of properties and the predominant source of income is also from such letting out, then the income received, okay, is taxable under business or profession. Then the income received, okay, this is the key thing. In this case, it is held that, okay, the income received will be taxable here, okay. Chennai Properties and Investments, where they have held that if the main object is letting out of properties, then the income will be taxable under PGBP, okay. I will tell you the way the question can come on top of it. Okay, X and Co, a construction company. X and Co, a company involved in letting out of properties. In the Mari, when they start the question, no, you can be clear. Somewhere they will come to this Chennai property. Somewhere they will come to Chennai Properties case. So the examiner will not leave you with a vague question that it is a manufacturing company letting out of property. And that we are very clear it is IHP. It is IHP. Only these type of wordings, the company's name, that itself will lead you to the belief. I have always told you, when they start the wordings, when they start the wording that X and Co, a manufacturing company, one of the provisions will test on something related to manufacturing. Otherwise, they can just start the question X and Co. They are giving manufacturing means one question, additional depreciation might be there, skill development expenditure might be there. Somewhere there will be a small provision which touches upon manufacturing. So when they start the question, the storytelling part of the question will lead you to the belief where they are coming to question us, which exact provision they are coming to question us. So in that aspect also you will be very clear, not that the question will be vague. I don't believe it will be vague. If it is vague, then be sure whatever you write, you are getting marks. Assessee company, a warehousing corporation, was predominantly involved in letting out of business on building and godown, but was also providing subsidiary services. Comment on its treatment. It is NDR Warehousing Corporation, Warehousing Private Limited. This is the case law where I am trying to recollect for you. The primary object of the company is construction of warehouses and letting it out. Hence, the rental income is towards the further primary object. Further, the consideration received is also for upkeep and maintenance, not only for letting out of properties. Hence, the whole amount should be treated as business income. If I can take you to a small house property, there is a concept called, okay, I'm trying to come to the concept, 1 minute. I don't exactly remember the heading. Okay, where the rent of the house property is for both the property and amenities. Composite rent, that's the concept, sorry. Composite rent is the concept, where the rent received is both for letting out of house property and also amenities. Then, house property chapter, there is a provision. Whether it is separable, that is, house property how much, amenities how much. If it is separable, house property is taxable under IHP, amenities is taxable under IFOS. If it is not separable, remember, major component might also be property. If it is not separable, taxable under IFOS only. So, here look at it. Okay, further the consideration is also for upkeep and maintenance. Further, the consideration paid is not just for the property, it is also for upkeep and maintenance. So the income will be taxable under business or profession only. So the income will be taxable under, okay, NDR warehousing private limited. Okay, NDR warehousing private limited. Okay, income received is from the primary object of the company. Further, income is not only rent for properties let out, it also includes for amenities provided. Hence, is taxable under PGB. Hence, it is taxable under PGBP only and not under any other aspect. NDR Warehousing Private Limited, that is the case law. Assessee received land allotted by Corporation of Madras on a lease for a period of 51 years. Assessee constructed various shops and establishments and earned rental income on subletting. Assessee declares these as business income. No, it will be treated as rental house property income only. I have told you in Chennai properties case what are all the importance. The main object and the predominant source of revenue. Here, assessee got a lease of land for a period of 51 years. Assessee got a lease of land for a period of 51 years. Remember, more than 12 years, if I get something, I am the deemed owner of the property. Section 27 of the house property chapter says, I become the deemed owner of the property. And I constructed, the number of shops is never an aspect. The number of, okay, I constructed various shops and commercial establishment, let out and earned income. Okay, assessee will be regarded as deemed owner of the property. Assessee will be regarded as deemed owner of the property. Income from letting out of shops and commercial establishment will be treated as income from house property and taxed under that head. Okay, the entire section, the entire provision is section 27 related. 27 which is part of house property. Section 27 which is part of house property. So that is where we are coming to. That is where this section, this provision comes to. Liquidated damages received from the company, from the supplier of plant and machinery. Okay, I have already analyzed this case law, so I'm just writing it and leaving it. Okay, refer Saurashtra Cements. Okay, that is where we have said that if it can be identified with the asset, that should be taken to the asset. Interest received on excess application money deposited in a bank, under what head this will be taxable? Okay, right, under what head this will be taxable? Again, interest on margin money deposited with the bank for obtaining bank guarantee. So these two things I'm taking it up together because these are discussed in the same case law in K and O. That is the case law. They said that if there is some excess money available to you, I'm repeating, if there is excess money available to you, that which is not used in business, you have some surplus money in Chennai. You have some surplus money available to you, which is not used in the business, that you deposit, earn interest. Some surplus money is available to you, which you have not used it in the business, that you deposit, earn interest. It will be taxable under IFOS. But here, the bank guarantee is for the purpose of business. To obtain the bank guarantee, you should keep margin money deposited. To obtain the bank guarantee, you should keep the margin money deposited. Any interest on such margin money is business income because it is directly linked to the business, where any interest is received on margin money deposited for obtaining bank guarantee, the same should be treated as business income. However, any surplus money deposited, surplus money means that which is not used for business or profession now. Any surplus money deposited, the interest earned on such surplus money shall be treated as other sources. Shall be treated as other sources. This is the judgment in K and Co. The provision, the examination question will be clear margin money. Okay, so in that case, you can definitely go ahead and tap this particular case law. Okay, okay. Interest received on excess application money deposited in a bank. That is, share application, you go in for an issue of shares, the application money received should be kept in a separate bank account. The application money received should be kept in a separate bank account, my dear friends. The application money received should be kept in a separate bank account. You kept it in a separate bank account. You kept it in a separate bank account. And then when can you use it? After the issue is over, after excess application money is refunded. You refunded the excess application money along with interest. Now, for the application money kept deposited in a separate bank account for which shares are going to be allotted, you get interest. And the interest, is it business income? Can I set off the public issue expenses against that? Became a case law in Sri Rama Multi-Tech. Okay, became a case law in Sri Rama Multi-Tech, for which the court held was this application money is being deposited only due to a statutory requirement, and this will not take the character of surplus money available with the assessee. There is a statutory requirement that you should keep the application money deposited in a separate account. It is not assessee's will to do that. Company law makes it, keeps a sword on my head and says, boss, keep it till you allot it. So this cannot be called as surplus money available which has been deposited. So this should be considered as business income. Any public issue expenses can be adjusted against that income. Any share issue expenses in Rama Multi Tech Sri Rama. Okay, Limited. Okay, in Sri Rama Multi Tech Limited, it was held that deposit of application money is a statutory requirement and cannot be linked with surplus fund deposited. Okay, this is a statutory requirement and it should not be treated as if I have surplus fund I have deposited. Any interest on such deposit will be treated as business income which is available for setting off public issue expenses. Okay, this is the judgment in Sri Rama Multi Tech Limited, where the question itself is, can I set it off? But you can say that this is a business income because like K and Co, this is also directly linked with the business. It is not that I have some surplus money and I have kept the deposit. It is not that I have some surplus money and I have kept the deposit. Okay. Okay. Rental income, we have already seen. Refer Chennai properties. Okay. Refer Chennai properties. Okay. These are all the income related questions they can ask you. These are all the various income related things. If you spend, okay, 10 minutes, you will be able to recollect all these things. Maximum, worst case scenario is you don't remember the case law. Okay, do not take extra effort. Do not get stressed out due to not getting the case law name. But otherwise, provisionally, they cannot ask you any income related provisions. Be very confident. I am very assuring you, these are, it can be an adjustment or it can be a direct question or it can be in the mentioned in the P&L itself. You know what note to write. Okay, right, friends? Majority of the time it is not a lack of preparation, it is lack of confidence that doesn't go well with the examination. Please be sure, apart from this, okay, what we have spent some 40 minutes here, 10 minutes if you go through this later, this sheet in your before examination, you are through with the income provisions. Apart from it, you can go on with any number of it will not go, they will not be asking you. Yeah, composite friend. Thank you, friend. Yeah. Yes. Shall we? Right? Okay. Now, if I go to the expenditure side, okay, if I go to the expenditure side on a larger scale, let me speak about it. Section 30, 31, 32 is asset based. 30 expenses in relation to building, 31 expenses in relation to plant, machinery and furniture, 32 depreciation. Section 30, 31, 32 asset based. Section 33 deposit based. Tea, coffee, rubber. In that I have to remember that these are partly agriculture, partly business. Site restoration was never tested. 35 is where I can claim the capital expenditure also as deduction. Scientific research, specified business, amortization, social welfare expenditure, like agriculture extension program, skill development program, like that. 36 other expenses, 37 general expenses. Let's go in the same pattern and try to understand the small intricacies they can question you with. Okay. Understanding asset-based expenditures under section 30, 31, 32. But when I am doing, I'm going to open up and do everything. Okay, right? I am sure you can catch up with the concepts. Illati, you are just following it up. After that, you can small refer to. Okay, right? You might suddenly feel, are we going fast? We are not. Whenever we are recollecting, we try to go and understand lot of things. The time available to understand all these things might be shorter. So we are not going fast. Anywhere I'm fast, you have all the right to stop me. We are only trying to use the maximum available time. Okay, right. Divya and Lalita, they are very good friends of mine also. Okay, a firm of chartered accountant commenced their profession on 1st April 2020. For the year ended 31st March 2021, they declared an income of 17,10,000 or after debiting the following. Verify the correctness of the income by quoting the respective provision. Depreciation of 40% was claimed on computer purchased in June 20, no problem. Mobile phone of rupees 36,000 purchased in August 2020. Printer of 17,000 purchased in September and scanner of 24,000 purchased in December. Okay, the problem here is we are speaking about mobile phones. Federal Bank case law, okay, has clearly said that mobile phone is not a computer or mobile phone is not an accessory. Okay, that is Federal Bank, DSES, Emuna. There are two case laws where we saw what is an accessory and what is not an accessory. What is an accessory and what is not an accessory. So, computer 40% correct. Printer is an accessory, 40% correct. Whereas mobile phone is not an accessory. Okay, so only 15% can be claimed. 15% can be claimed. The remaining 25% has to be reversed. For scanner which is purchased in December 2020, used for less than 180 days, they should have only claimed 20%. They should have only claimed 20%. But unfortunately, they have claimed 40%. We need to reverse 20%. Okay. Divya purchased the Maruti. Date help me out. Divya purchased the Maruti car for 11 lakhs in May 2020. Please, May 2020. And Lalita in September 2020. Depreciation of 15% was claimed on both the cars. 1/3 of the car is used for personal purpose, so that 1/3 I should reverse. You identify that these vehicles are not registered in the name of the firm, but in their individual name. A. Sivakami and Co. gives you the relief. Okay, is the beneficial owner. Okay, who is actually using the asset? The asset is used mainly for the purpose of firm. Registration is just a legal formality, but whoever, if the assessee is the beneficial owner of the asset, the benefit from the asset is accruing to the firm only, they can claim. A glow sign board has been installed outside the office premises in April 2020 for 3,10,000. Depreciation is the no. Oriental Ceramics case law has said that the entire cost of the glow sign board can be claimed as deduction. Okay. Rupees 16,000 per month was paid to Divya as the entire premises which is owned by her is used for the profession. The fair rental value 40A subsection 2 payment to relatives in excess of fair market value should be disallowed. Compute the revised income of the firm. They also seek your advice on the maximum remuneration that can be paid. On a market standard, you understand that for a startup practice, the remuneration is in the range of 40,000. Great City Manufacturing Co. has, in that case law, when law itself gives you a limitation, 40B tells you what is the maximum remuneration that can be paid. The market, fair market value should not be taken into account. Okay, we are opening up and recollecting lot of things. Okay, let's slowly but clearly understand the solution. Question number 1. Computation of income of the firm. These decorations, slowly it will go off because net profit as per profit and loss account, they have 17,10,000. 70 after debiting the following. Okay. Okay. First thing is about before going, in your practice manual or in your suggested answers, they would have put add certain items, less certain items. Okay. But the biggest threat in examination is probably we'll miss an adjustment. Oh, this is less, we will come to it later in that tension. So you can do it as adjustments. If it is add, we are going to write the amount. If it is less, it is within bracket, which is very much allowed. Don't try to add certain items, less certain item. If you are very familiar with that, go with that. But if you want to go like this style will be better because you will not leave any item. Now, adjustment in BSES Yamuna and Federal Bank, it was held that the depreciation of 40% is available only for computers and its accessories. Mobile phones and EPABX, okay, are standalone equipments, not an accessory of a computer, or standalone equipments. Hence, only 15% can be claimed for them. Additional depreciation claim is reversed. Additional depreciation claimed is reversed, my dear friends. So they have claimed on 36,000 40%. I am going to reverse 36,000 into 25%. The additional depreciation which they have claimed, okay, the extra depreciation is reversed. 36,000 into 25%. Okay. For scanner purchased and put to use for less than 180 days, only 50% of eligible depreciation can be claimed. The other 50% is disallowed. The other 50% is disallowed. So it is purchased in December. So 24,000 into 20% is disallowed. 24,000 into 20% is disallowed. Disallowed means added back. They have debited, so I am adding it back. Okay. Divya purchased a motor car in May 20. Lalita purchased in September 20. Depreciation of 15% was claimed. 1/3 of the car was used for personal purposes. Okay. First I will write in A. Sivakami and Co. case, it is held that depreciation can be claimed by the beneficial owner. Okay. Okay. Legal owner is on the basis of registration. Beneficial owner is one who gets the benefit. Okay. Hence, the firm can claim depreciation on car. Okay. 1/3 of depreciation claim as it is personal portion. Okay, 1/3 of the depreciation, 11 lakhs, and Lalita purchased. Okay, Divya purchased for 1 lakh and Lalita purchased it. Okay, same value. 15% they have claimed. So 11 lakhs into 2 cars into 15% into 1/3. Okay, 11 lakhs into 2 into 15% into 1/3 is disallowed. They have claimed the entire 15%. Repeating, 11 lakhs is the value of car, 2 cars, into 15% they have claimed, but I am disallowing 1/3 of it. 1,10,000 stands disallowed. 1,10,000 stands disallowed. A glow sign board has been installed outside the office for 310 and depreciation has been claimed. Okay. In Oriental Ceramics case, it was held that the cost of glow sign board can be claimed as a deduction. Okay, so the entire cost can be claimed as deduction. I am disallowing the depreciation and allowing the entire cost of glow sign board. Okay, depreciation claimed, I am disallowing that. That is 3,10,000 into 15%. I am disallowing that. They have claimed 15% on 3,10,000. I am disallowing it, and cost of glow sign board that can be claimed minus 3,10,000. Minus 3,10,000. Okay, the entire cost can be claimed, not just depreciation. You can claim the entire cost. Rent of rupees 16,000 per month was paid to Divya as the entire premises is owned by her and used for her profession. The fair rental value of similar property in the area is only 12,000. According to section 40A subsection 2, any payment to relative should be at fair market value. Where payment made is in excess of fair market value, then such excess shall be disallowed. Then such excess shall be disallowed. In this case, 16,000 minus 12,000 into 12 months. 4,000 into 12 months. 16,000 is paid and 12,000 is only allowed. Okay. Okay. So what you now get is known as book profit. after making, because they have not charged any remuneration, what you now get is known as book profit, which comes to 16 lakh 18,300, which comes to 16 lakh 18,300. Book profit comes to 16 lakh 18,300. Maximum permissible remuneration under section 40B. Maximum permissible remuneration under section 40B. In Great City Manufacturing Company, it was held that the limits specified in 40B will be considered as fair market value. Whatever is the limit specified in 40B will be considered as fair market value. You need not compute a separate fair market value. The limits specified under section 40B will only be considered as fair market value. Okay. So, and I assume this is as per deed. Okay. If to recollect, I am writing on the first 3 lakhs at 90%. So 3 lakh into 90%. 3 lakh into 90%. On the balance at 60%. On the balance at 60%. So this minus 3 lakhs into 60%. Okay, maximum permissible remuneration first 3 lakhs, 90% or 1,50,000. So that doesn't have a problem here. So 90%, and on the balance 3 lakhs, on the balance will be 60%. This will be the maximum permissible remuneration. Okay, taxable business income. The taxable business income will be 5,57,320. In examination, if you don't remember the case law, you can Oriental Ceramics. I don't remember the case law. Glow signboard can be claimed as deduction. Okay, in a famous case law like that, you can write. Okay, if you remember the case law, write the case law, but state the obvious. Every line, please make the adjustment. If there is no adjustment, write it and leave it as blank or put a nil or dash, so that they understand what it is. So that they understand what it is. Okay. Okay. Question number 2. Opening WDV of plant and machinery as on 1/4/2020, 70 lakhs. New plant and machinery purchased on 8th June, 40 lakhs. 15th January, 19 lakhs. On analysis, you find that in the last year, they have purchased the plant in 18th January for 23 lakhs. Compute eligible depreciation, assuming it is a manufacturing concern and the asset is used for manufacture. Compute deduction under section 32, assuming the entity is located in the notified area in the state of Bihar. First, I will answer the part 1. opening WDV as on 1st April 2020. Opening WDV as on 1st April 2020, 70 lakhs. Additions. Purchased and put to use for more than 180 or 180 days or more. For 180 days or more. Purchased and put to use for 180 days or more, 40 lakhs. Purchased and put to use for less than 180 days. Less than 180 days. New plant and machinery purchase 19 lakhs. Okay, there is no deletions. There is no deletions. Balance available for depreciation. Balance available for depreciation. Less depreciation. Less depreciation. Normal depreciation. Normal depreciation. Please understand. This plus this into 15%. Okay. If there is a reduction, minus, okay, that into 15% plus asset purchased in the second half into 7.5%. Repeating, 19 lakhs into 7.5% plus 1 crore 10 lakh into 15%. Asset put to use for less than 180 days, only half of the eligible depreciation can be claimed. Only half of the eligible depreciation can be claimed. Additional depreciation. Additional depreciation. Here is our concentration. 40 lakhs into 20% plus 19 lakhs into 10% plus the most important, last year whatever asset purchased in the second half, last year whatever asset purchased in the second half, on this only half of the eligible depreciation would have been claimed. I should claim the other half during the current year. 23 lakhs into 10%. Because last year they would have claimed only half of the additional depreciation. The law tells me the balance additional depreciation can be claimed in the subsequent year. The balance additional depreciation can be claimed in the subsequent year. So this comes to 30 lakh 12,000. This comes to 30 lakh 12,000. Okay, this is our main answer. Depreciation is our main answer. Okay, closing WDV. So the eligible depreciation is 30 lakh 12,500. What did we understand? How to compute normal depreciation, half for the asset which is put to use for less than 180 days. And in additional depreciation, we understood and we recollected the point. If in the last year an asset is there where only half of the eligible depreciation is claimed, the balance half has to be claimed in the current year. The balance half has to be claimed in the current year. I am doing the part B also. Part B also. For that, I need to write something theoretically. Okay, though we know this, till financial year 1920. Till financial year 1920, additional depreciation is 35% for manufacturing units located in the notified areas of the state of Bihar, West Bengal, Andhra Pradesh and Telangana. However, the provision is not applicable from financial year 2021, which means the rate is only 20% and not 35%. Okay, till financial year 1920, the rate of additional depreciation, okay, till financial year 1920, the rate of additional depreciation is 35%. But now that provision is gone, it is only 20%. In this, only one thing can be the testing factor. Only one thing can be the testing factor. Okay, for the last year purchased asset, okay, this can be 17.5% because the last year you would have claimed only 17.5. The loss is balance can be claimed this year. Till last year the provision is 35%. Till last year the provision is 35%. Till financial year 1920. For the financial year 2021, it is only 20% and 10%. The only place where you will have a small additional aspect is for the 23 lakhs which you purchased the last year. No, for the 23 lakhs, probably you will be able to claim only probably you'll be able to claim 17.5%, not 10%, because last year you would have claimed 17.5%. This is the only difference. Otherwise, the answer remains the same. Additional depreciation, okay, for the asset purchased in the second half of 1920, the balance 17.5% can be claimed this year. Though this year the provision has changed, but the last year provision and this year provision, there is a small change in the rate. So the balance can be claimed becomes 17.5%. Understanding section 28 to 33, up to 33 now we are going with, along with assessment of individuals, okay. Jatin Chopra is actively involved in plantation sector and provides you the following particulars of his income for the financial year 31st March 21. Compute his total income and tax due thereon. Advise him as to optional tax mechanism along with computation of tax for such mechanism. Income from growing and manufacturing of tea before claiming deduction under section 32 or 33 AB is 22 lakhs. He has withdrawn from tea development account in May and invested in plant and machinery 15%, 8 lakhs. Jatin withdraws another 5 lakhs, okay, it is 5 lakhs from tea development, which is used for providing advance to his new house property. For the current year, he deposited 7,50,000 in tea development account in 2021. Income from sale of grown, cured, roasted and grounded coffee is 14 lakhs. Income from sale of saplings exempt. Income from sale of saplings is exempt. Okay, or small nurseries etc. are exempt. These are not taxable. Dividend income from an Indian company. Jatin has taken loan for the purpose of investing. Interest paid during the year amounted to 250, that is the section 57 restriction of 20%. Jatin purchased an agricultural land for 25 lakhs. The stamp value of the said land was 27 lakhs. Jatin purchased a new house property for 44 lakhs, being the stamp value, and used for it for his own residence. He does not own any other property before this date. For purchasing this property, Jatin took a loan of 40 lakhs at the interest of 9% from Indian Bank. We are also looking at Section 80 EEA. Section 80 EEA. Cost of the house, the stamp value of the house should be less than 45 lakhs, fulfilled. That should be the first house, fulfilled. It should be used for self-occupation, fulfilled. Okay, and the loan should be taken from a recognized financial institution, fulfilled. If all these conditions are satisfied, then he is eligible to claim Section 80 EEA. That is what we are going to claim it. Okay, look through the question here. Both the tea, அதாவது மூணு business இருக்கு, tea, coffee, rubber. Tea, coffee ரெண்டுமே 60-40. 60% business income, 40% agricultural income. But coffee, if it is not roasted and grounded, it will become 25-75. Coffee, if it is not roasted and grounded, 25-75. Raw coffee, 25-75. And rubber, 35-65. Rubber, 35-65. Okay, quickly write down, so you cannot write down, quickly write down your notebook. Tea, comma, coffee, roasted and grounded, 60-40. 60-40. Okay, coffee, grown and cured, 75-25. The first one is agriculture, 75-25. Rubber, 65-35. Rubber, 65-35. Nursery, fully exempt. Nursery, fully exempt. So, he has these things. Okay, he has these things. Tea and coffee as his business. Dividend as his IFOS. He has purchased the land, which also we need to check the inadequate consideration aspect of it, and then progress. And then we need to find out in the optional tax regime. In the optional tax regime, he cannot claim 33AB. He cannot claim any deduction under section 33. Fine. Let us work out and check it out. Let us first work out the normal income. Computation of total income of Jatin for AY 21-22. Business or profession. Business or profession. Okay. Profit from growing and manufacturing tea before allowing 33AB. Before allowing 33AB, 22 lakhs. less. Profit from growing and manufacturing before allowing 33AB, 22 lakhs, less. Okay. Actual amount deposited. Let's actual amount deposited. Actual amount deposited is 7,50,000. 7,50,000. 40% of profits. 40% of profits into 40%. Okay. Whichever is less. Whichever is less. Minimum of these two things. Whichever is less will be allowed as deduction. Okay. So, profit after claiming 33AB. Profit after claiming 33AB. 22 lakhs minus 7,50,000. Business income at the rate of, okay, 60% is towards agricultural income, 40% is business income. 60 is to 40 at the rate of 40%. So, 14,50,000 into 40%. 5,80,000. 5,80,000. Remember, where the asset is claimed as deduction, depreciation cannot be claimed. Can I claim depreciation on this new plant and machinery of rupees 8 lakhs? The answer is no, because the entire amount is claimed as deduction. When you made the deposit, the entire amount is claimed as deduction. You cannot claim depreciation. You cannot claim depreciation. So, you can only claim the 33AB. For example, you have claimed 7,50,000. You've purchased an asset using this money. Again, you cannot claim depreciation on this because you have claimed the entire money itself as deduction. 5,80,000. Okay. Amount withdrawn from the development account and not used for specified purpose. Okay. Amount withdrawn from the development account, make it 5 lakhs. Okay. And not utilized for specified purpose, 5 lakhs. Amount withdrawn from the development account and not utilized for specified purpose, business income at the rate of 40%. On this, again, I will take only 40%. On this, again, I will take only 40%. Okay, on this again, I will take only 40%. Income from growing of sale of grown cured grounded coffee. Profit from, okay, grown, cured, grounded and roasted coffee. Profit from grown, cured and grounded roasted coffee, 14 lakhs. Okay. Business income at the rate of 40%, 14 lakhs into 40%, 5,60,000. Business income again, 14 lakhs into 40%, 5,60,000. Okay. Income from sale of sapling, exempt. Okay, nurseries are not taxable, so fully exempt. So fully exempt. Okay, am I clear to you? Right? I should have put this first. I should have put this first. I should have started with this. So I'm sorry. House property. I should have started house property, then come to PGBP. but house property. Okay, here self-occupied property. Self-occupied property. So NAV will be nil. NAV will be nil, my dear friend. Interest on borrowed capital. Interest on borrowed capital. You got a loan of 40 lakhs at 9% on 1st June 2020. Okay, 40 lakhs into 9% on 1st June, 10 by 12. On 1st June 2020, you have got this loan, 3 lakhs. Repeating, interest on borrowed capital, 40 lakhs into 9% into 10 by 12, 1st June onwards, so 3 lakhs. Okay, maximum interest restricted to, in house property chapter, maximum you can claim is 2 lakhs. For a self-occupied property, the maximum interest you can claim under house property chapter is 2 lakhs. Okay. Other sources. Okay. What are all the other sources of income? The question says. Okay. Dividend income. Dividend income. Okay. 12 lakhs. Yes. Interest. Okay. Actual interest. Actual interest comes to 2,50,000. 20% of dividend. That is the maximum you can claim. Okay. 20% is what the maximum you can claim. So restricted to, okay, 2,40,000. Now the taxable dividend income will be 12 lakh minus 2,40,000, 9,60,000. Remember, section 57 says the maximum interest, in our amendment it is there, the maximum interest you can claim is restricted to 20% of dividend income. So you can only claim 9,60,000. You can only claim 9,60,000. Okay. Inadequate consideration on purchase of land. Okay. Actual consideration paid. Actual consideration paid 25 lakhs. Actual consideration paid 25 lakh. Stamp value. Stamp value on the land is 27 lakhs. Okay. Remember, this is the amendment. 110% of actual consideration. 110% of actual consideration. Okay. 27,50,000. Last year it was 105%. Now it is 110%. Since stamp value has not exceeded 110% of actual consideration. Okay. Inadequate consideration needs to be ignored. Okay. Since it has not exceeded, nothing is taxable. Only if it has exceeded the entire inadequate consideration. At that time, I will not look into 110%. Okay. Now, gross total income. Gross total income. Gross total income, I'm hitting at 21 lakhs. Gross total income, I'm hitting at 21 lakhs. To quickly recollect, from T 5,80,000, T development account withdrawal but not utilized for specified purpose. They have used for house property 2 lakhs. Coffee 5,60,000. House property, there is a loss of 2 lakhs. Okay, taxable dividend income is 960. So my gross total income comes to 21 lakhs. Deduction under section 80 EEA. If you remember, this has been extended for 1 year. This has been extended for 1 year. Okay, deduction under section 80 EEA. All conditions therein are fulfilled. Own property, stamp value not exceeding 45 lakhs, loan taken from a financial institution, and self-occupied also. Okay, right? Interest exceeding rupees 2 lakhs. Okay, is 1 lakh, because the interest that we have is 3 lakhs. So already claimed 2 lakhs. So you have another 1 lakh. Okay, maximum under this section is 1,50,000. Okay, so you can only claim this 1 lakh. Okay, so total income is 20 lakhs. Total income is 20 lakhs, my dear friends. Total income is 20 lakhs. That is, the income that you can claim is only 20 lakhs. Okay, right? So I am moving into computation of tax on total income. I'm moving into computation of tax on total income. All income are taxable at normal rates. No more that dividend 2 lakh extra, that is gone. So all income are taxable at normal rate, but there is something very interesting. Okay, income other than agricultural income is 20 lakhs. Income other than agricultural income is 20 lakhs. Agricultural income, because 60% has always been agricultural income. Okay, at 1450 plus 5 lakhs plus 14 lakhs, in that 60% is always agricultural income. So agricultural income will be, my dear friends, 14,50,000 plus, okay, plus 5 lakhs plus other 14 lakhs of coffee, okay, into 60%. This is always agriculture income. Repeating, okay, this 14 lakhs 50,000 plus this 5 lakhs plus this 14 lakhs, 40% is business income. Remaining 60% is agriculture income. 20 lakh 10,000. 20 lakhs 10,000. Okay. Step 1. Tax by including agri income. Tax by including agri income. So what is the component coming to? 20 lakh plus 20 lakh 10,000, 40 lakh 10,000. On that, the tax will be 40 lakh 10,000 minus 10 lakhs into 30% plus 1,12,500. On the first 10 lakhs, 1,12,500. So remaining 30 lakh and 10,000, 30 lakh 10,000 into 30%, 10 lakh 15,500. Step 2, agri income plus basic exemption limit, tax on the same. So agri income plus basic exemption limit of 2,50,000, that is 22,60,000. Tax on the same comes to 4,90,500. Okay, 12,60,000 into 30%, 12,60,000 into 30% plus 112,500. 112,500. Difference is 5,25,000. Difference is 5,25,000. Add HEC at the rate of 4%. Add HEC at the rate of 4%. Okay. Total tax payable. 1 minute, I'll just check. Agri income by including the agri income. Rarest maybe I'm putting everything into you so that in examination, if you see agricultural income, you will get immediately this into your mind. Okay, tax by including agricultural income. So 40 10 I am getting 10 lakh 15,500. Tax by exclude, that is whatever is for the agriculture income portion, 2010 plus 250, tax on that, the difference into
Sir,
listening friend.
sir, in the first point, could you explain that 8 lakhs, sir? In the question.
Okay, why I cannot charge it? Because they have said income from growing and manufacturing of tea before claiming deduction under 32. So the question itself is, can I claim 15% on this 8 lakhs? He has withdrawn from tea development account, which means the expenditure is already claimed. The expenditure is already claimed. He has withdrawn from tea development account and invested in new plant and machinery, where it is like you have already claimed the cost of plant and machinery. Okay, you cannot, where the asset itself is claimed as deduction, scientific research, specified business, everywhere, where the asset itself is claimed as deduction, depreciation cannot be claimed. Here also, since the T has withdrawn from T development account, the asset itself is claimed as deduction, so don't claim depreciation.
No, why is it not taxed as business income? Because it is withdrawn?
Yeah, it is withdrawn and used for specified purpose. If it is withdrawn and used for purchase of plant and machinery, purchase of field equipment, purchase of computer, it is not taxable. If it is withdrawn and not used or used for your personal purpose or used for office equipment, then it will be taxed.
Is there any definition for specified purpose?
Specified purpose means purchase of field equipment. That is, those which are used in the tea development. You can purchase tractors, irrigation equipment. You can purchase any asset which is improving your production. Plant and machinery you can purchase. The only office equipment allowed is computers. All others are not allowed.
All right, thank you.
Okay. On a quick scale, to recollect the optional tax regime, okay, computation of tax under optional tax regime. Computation of tax under optional tax regime. House property. Interest on self-occupation cannot be claimed. Interest on let out can be claimed in optional tax regime, but interest on self-occupied property 24B, interest on self-occupied property to the extent of the 2 lakhs cannot be claimed under optional tax regime, cannot be claimed under optional tax regime, so that is gone. Okay, business or profession. business all. You cannot claim 33AB deduction. Very unfortunate. You cannot claim 33AB deduction. So what happens? Profit from growing and manufacturing tea. How much it comes to? 22 lakhs. Directly 40% on this taxable. Directly 40% on this taxable. You cannot claim 33AB under optional tax regime. Okay, withdrawn from tea development account but not used for specified purpose. Withdrawn from tea development account but not used for specified purpose, 40% taxable. Okay, profit from coffee. Okay, here also if you have made a deposit, you cannot claim it. Okay, 40% taxable. IFOS, dividend as worked above. Okay, 57 you can claim, only family pension you cannot claim. So dividend is as we have worked 9,60,000. 9,60,000 dividend. Okay. Gross total income slash total income. Why? Except 80 JJAA and 80 LA for IFSC. Units located in IFSC. Except these two things, others cannot be claimed. Okay, others cannot be claimed. So you are getting 26 lakhs. You are getting 26 lakhs. You are getting 26 lakhs, my dear friends. Okay, I am now going for computation of total income. Computation of total income. I am now going for computation of total income. Non-agri income is 26 lakhs. Agri income will be, my dear friends, all these things, 22 plus 5 plus 14 into 60%, 2460. Tax, that is step 1. Tax by including agri income. Tax by including agri income, that is 50 lakh 60,000. 50 lakh 60,000, my dear friends. Look at the working, if you remember, 50 lakh 60,000 minus 15 lakhs into 30% plus 187,500. Okay, up to 15 lakhs, it is 1,87,500. First 250 nil, next 250 at the rate of 5%, 12,500. Next 250, okay, at the rate of 10%. Next 250, okay, up to 15 lakhs. Up to 15 lakhs, you will hit at 1,87,500. More than 15 lakhs, it is taxable at 30%. More than 15 lakhs, it is taxable at 30%. Step 2, tax on agri income plus basic exemption limit. Nothing but 2460 plus 2,50,000. Okay, same formula. up to 187,500. Okay, net tax add HEC at the rate of 4%. So optional tax regime cannot be beneficial, I told you, except for a senior citizen. Otherwise, optional tax regime will not be beneficial. Normal tax regime gave you a tax of 546, whereas optional tax regime gives you a tax of 7,33,200. I'm not saying such big question will come. I'm just recollecting for you the provisions so that you are able to get it back into your memory. I'm just recollecting the provision for you. Any chat, please use the. Okay. Okay. There are two questions which I want to take it up before progressing to the next level. Okay, question number one is from our friend Gautam, who has asked me, can't I claim 40% depreciation now on that plant and machinery because it is not allowed? Technically, he is right in the sense from the next year you can claim. This is the first year of optional tax regime. So last year you would have claimed the 33 AB. Now withdrawing it and purchasing plant and machinery, you cannot. Technically, from next year, this year I have not given the deduction. Next year you want to claim, you can claim because when you withdraw. But this being the first year of optional tax regime, the deposit would have been made in any of the preceding years where you would have claimed the deduction. At that time, optional tax regime is not there. So now you cannot say that 40% or whatever is the depreciation of 15% on plant and machinery can be claimed. So that is one of the doubts which I want to clarify. Of course, since it is the first year, that question doesn't arise, but in the subsequent year, it depends upon precedingly whether he has claimed or not. Abhiprita has asked me the question. In the last question, new plant and machinery, like only 40% might have been allowed when it is deposited. No, when it is deposited 100%, you can see that the entire 107,50,000 would have been allowed. In that money only you are purchasing the new plant and machinery. That is last year's also 750 is namesake I'm taking. So entire money which has been allowed, using that money only you are purchasing the plant and machinery. So there is no 40% concept over there. There is no 40% concept over there. Okay. Right. Again, as I told you, a rarity. I don't think optional tax regime they will confuse and ask. It will be straightforward and simple. Okay, but good to work out such questions also to recollect various professions. Section 35 AD and few other provisions. Section 35 AD is for specified business. Is for specified business. Question number 4. Can an electricity company claim the benefit of Section 35 AD? Okay. 35 AD is only for specified business. Okay. Manufacturing of power is not yet specified. Hence, the same cannot be claimed. Normally, all manufacturing benefits, 32 additional depreciation All manufacturing benefits are available for electricity company also. So you should not get confused that okay, electricity company can also claim 35AD. No, 35AD is only for specified business. There it is not manufacturing alone. Godowns, hotels, hospitals, oil pipelines. Okay, so not necessarily, it is not yet specified. Is it mandatory to claim 35AD? If assessee chooses not or not to claim, what are all the options available? Okay, from financial year 2021, it is not mandatory to claim 35AD. In other words, the section is optional, where assessee does not want to claim 35AD, he can claim depreciation for the said asset, and he will also have the option of he'll also have the option of considering alternative tax regime. Okay, if you don't want to claim 35AD, fine. You can go for optional tax regime or alternate tax regime, and you can now claim depreciation from financial year 2021. 35AD is not mandatory to claim. It is only optional to claim. It is only optional to claim. Section 4A. Raja Bhoga Yoga Limited commenced a hospital with 200 patient beds in Kanchipuram, which qualifies under 35AD. Be 200% sure. The question itself will say that it is a 35AD question. The question itself will say that it is a 35AD question, or they use the word specified business. The company gives you the following particulars, compute their income. Expenditure incurred in the past year, construction cost of building, equipment purchased for hospital, amount paid to a famous doctor in Kanchipuram for merging his practice, that is goodwill, other expenses to be capitalized with cost of building, 8 lakhs. Expenditure in 2021, construction cost, equipment purchased, rupees 2 lakhs was paid in cash on a single day as the supplier demanded the same. Furniture purchase 7 lakh, donation of 2 lakhs was received for such purchase, which is taken as part of capital fund by the entity. Revenue detail, income, expenditure, depreciation as per books. Following further details are available. Payment made to a doctor without deducting tax at source. Available regarding regular expenses. It is there in regular expenses. Payment made to a foreign consultant assisting in establishment, tax not deducted, 5 lakhs. However, the consultant submitted sufficient proof in July 2021 that he has considered the same as income and paid the due taxes. Payment made by cash on 10 different days for expediting approval, 120. Secret commission paid, 3,75,000. Determine the deductibility of each item. Read through once. Let's start with the first working note, that is, what is the total expenditure I can claim under section 35AD? What is the total expenditure I can claim under 35AD? One of the salient feature is past period expenditure can be accumulated and claimed in the first year of operation. Past period expenditures can be accumulated and claimed in the first year of operation. So even the past expenditure will be allowed. Okay, expenses incurred in 1920. Okay, so one by one, construction of building 66 lakhs. Construction of building 66 lakhs. Equipment 11 lakhs. Equipment 11 lakh. Okay. Goodwill. Okay. Goodwill. Remember, not allowed as deduction. Cost of land. None of the places land will be allowed. Investment in financial instruments not allowed. Goodwill not allowed. Repeating, cost of land, goodwill, and investment in financial instruments are not allowed. Okay. Other expenses of building 8 lakhs. Expenditure incurred in 2021. Expenditures incurred in 2021. Construction cost 32 lakhs. Equipment cost, okay. However, on a single day, if the payment exceeds rupees 10,000 and it is paid by unapproved modes. What are all unapproved modes? Cash, bearer check, cross check. Cash, bearer check, cross check are unapproved modes. Then the same will not be allowed. Then the same will not be allowed. In this case, okay, 2 lakhs is paid on a cash on a single day. It will not be allowed. So only 14 lakhs minus 2 lakhs will be allowed. That 2 lakhs you can never claim it as expenditure. Okay, நம்மளுடைய deferred taxல இது வந்து permanent difference. Never it can be claimed as deduction. Furniture and fixtures purchased 7 lakhs. Okay, donation of 2 lakhs is received. Cost of furniture and fixture after adjusting donation, which is like a subsidy. If subsidy is received for a depreciable asset, okay, it should be adjusted with the cost of the asset. Otherwise, it should be taken as income. Here, it is donation towards a specific asset. It's donation towards a specific asset. So, 2 lakhs. Okay. Total expenditure under 35 AD to be claimed in PY 2021. That is first year of operation. Comes to 1 crore 34 lakhs. Comes to 1 crore 34 lakhs, my dear friends. That comes to 1 crore 34 lakhs. Please work along with me. Don't wait for me to complete and then work along with me line by line. Okay. Regular.
Sir?
Yes, sir.
Sir, what is the relevance of part of capital fund by the entity?
That is They have not taken it to income. They have taken it as part of capital fund. நம்ம government grantலாம் படிக்கும்போது they will take it as part of liability, okay, as a reserve, okay. So that has no relevance. We have to reduce it in income tax law. Regular expenses allowed. Regular expenses allowed. Actual regular expenses. Actual regular expenses is 17 crore 10 lakhs. Less disallowed. Okay. What are all the regular expenses which are disallowed? Payment to a doctor without deducting tax and source 3,80,000. 30% of payment to a doctor for non-deduction. So 3,80,000 into 30%, 1,14,000. Okay, now I want you to understand. Payment made to a foreign consultant, tax not deducted, 5 lakhs. However, the consultant submitted proof only in July 2021. This will be disallowed in the financial year 2021 and allowed in the financial year 21-22. In the year in which you are submitting the proof, in the year in which you are submitting the proof, I know you have declared it as income, I accept. But even though you have submitted it before me filing the return also, I cannot take. This will be disallowed in the year in which it is incurred and allowed in the year in which the default is rectified or the proof is obtained. Okay, so payment to a foreign consultant for non-deduction, 100% disallowed. Okay. However, the same will be allowed in PY 21-22 as proof is obtained in July 21. So 100% disallowed. I will allow this. Accepted. I will allow this in the next year. Payment for expediting approval for 10 each day 10,000 it exceeds. Okay, section 40A subsection 3 disallowance. Okay, that is payment in excess of 10,000 on a single day to a single person. Secret commission takes the character of illegal payment. So it will not be allowed. 3,75,000. Okay. Regular expenses that can be claimed. Regular expenses that can be claimed is this minus all these things, this allowance. Okay. So only 16 crore 98 lakh 91,000 can be claimed. 16 crore 98 lakh 91,000 can be claimed. 16989100 can only be claimed.
Sir?
Raja?
Sir, that payment for expediting approval, can that also be told in the nature of illegal payment?
Yeah, you can say it in the nature of illegal payment or even millennia developers. Okay, that is a regularization fee paid. That can also be said. Yes, definitely yes. You can say that as illegal payment.
Sir, and that payment to foreign consultant, he would have taken it as income in 2021 and before my...
He would have taken it as income as 2021 and filed his return only in July.
Return he has given proof, then...
Once more?
Before my due date. That is before my due date of filing return of income.
Yeah. Even then you cannot claim. That's what I'm saying. He would have given it to you, the proof, before you filing your return. But the law says it will be adjusted only in the year. It will be allowed only in the year in which default is rectified or proof is obtained. So it will be disallowed in 1 year, allowed in the next year, even though you have sufficient proof before the due date of filing.
Right, sir.
Computation of income. Computation of income. 21 crore 64 21 crore 64 lakhs. Yes, regular expenses 35 AD expenditure depreciation for goodwill. இது நீங்க claim பண்ணலனாலும் பரவாயில்ல, because from next year it is not even allowed. The Finance Act has been amended, okay, that you cannot claim for these goodwill from next year. So minus 40 lakhs into 20. So I don't think goodwill will even be a part of question. Okay. Loss from income from if at all it had resulted in a loss, we all know what to do. If at all it has resulted in a loss, loss from specified business can be set off only against income from specified business. Loss from specified business can be set off only against income from specified business. Carry forward period indefinite. But here it is a loss, no income, no issues. No issues. So specified business, write the assets separately, have it, okay. You can optional only. Suppose if it is a 115 JB question, I know how to work out. We'll work out tomorrow about that. But if it is a firm or other things, I would have added back this and reduced the other expenditure. So remember these things. Okay, this is how specified business is done. Section 35, that is the scientific research, amortization, etc. Specify whether the following can be claimed as deduction: manufacturing company, trading company. Manufacturing company, trading company. 1 minute. Okay, later I will, okay, this is manufacturing, this is trading, okay. Purchase of construction of research lab, in both the cases cannot be claimed. Land cannot be claimed, okay, not allowed in both the cases, not allowed in both the cases, my dear friends, it cannot be claimed. Construction of research lab, construction yet to be completed. In scientific research, there is nothing called put to use. In scientific research expenditure, there is nothing called put to use as a condition. So, okay, can be claimed. Okay, in both the cases can be claimed. Okay, there is nothing called put to use condition in scientific research. Purchase of research equipment. Why is till last year, till the financial year 1920, for manufacturing you can claim 150% weighted deduction, but now 100% can only be claimed. Okay, that itself is a bigger benefit only. Okay, can be claimed. Okay, in both the cases, 100% can be claimed. Depreciation cannot be claimed. When the asset is claimed as deduction, you cannot claim depreciation. Cannot be claimed. Okay, cannot be claimed. The same on the other side also. So now there is no difference between trading except only for a couple of places. Purchase of research material, 100% can be claimed. Okay, 100% can be claimed. Okay, purchase of research equipment, 100% can be claimed. No more manufacturing enjoys that weighted deduction. Contribution to IIT for social science research, 100% can be claimed. Okay, national lab, 100%. Okay, 100% can be claimed. Here also 100%. Expenditure on voluntary retirement scheme which are approved, 1/5 to be claimed over 5 years. Okay, same provision. 1/5 can only be claimed. 1/5 can only be claimed. Amortization, 1/5 can be claimed. A payment for, please understand, this is retrenchment compensation. Payment for retrenchment compensation, fully claimed. VRS kada 1/5. VRS kada 1/5. Okay, here it is fully claimed in both the cases, fully claimed. VRS only 1/5, whereas retrenchment compensation, okay, there is fully claimed. Difference between redemption value and issue price of zero coupon bond, 1/5 can only be claimed. Okay, 1/5 to be claimed. Sorry, not 1/5. Sorry. Amortized over the period of bond. Over the life of the bond, it is amortized. Over the life of the bond, it is amortized. Okay, this is rare. The last one is rare. The others can be questioned, especially because of amendment. The others can be questioned. Please be aware and remember retrenchment compensation. I want you to remember retrenchment compensation can be claimed. Only VRS has the amortization benefit. Retrenchment doesn't have amortization. It can be claimed in the year one itself. I'll ensure that the diagram is neat when I post it. One of the finest question which we are going to do, which is going to give us lot of information. By this question, you are becoming very strong in your PGBP chapter. I mean it. Okay, one of the finest question. You will enjoy doing this question. Your concentration, together we are going to work. The following particulars are provided for 3 consecutive years. Assume it as a non-manufacturing entity. Net profit before adjusting the following. Remember, it is before adjusting. So we are going to allow whatever is going to be acceptable. Okay. Payment made to a non-resident without deducting tax at source. Non-resident was able to provide sufficient proof of declaring the same as income, filing return and paying in respective years. So in this 76,000, first year I cannot claim it as deduction. I have paid it. Next year I can claim because he would have submitted proof. 84,000. This year I cannot claim, but subsequent year, in the year in which he is submitting the proof, I can give it. I can give it. Okay. In the year in which he is submitting the proof, I can give it. Payment to a resident assessee without deducting tax at source. Only 70% will be allowed. Before, not disallowance provision, whatever is allowed. Only 70% will be allowed. In the year in which you are rectifying the default, the remaining 30% will be allowed. Repeating, only 70% will be allowed. In the year in which you are rectifying the default, the remaining 30% will be allowed. Salary paid to a director without deducting tax at source. Director submitted the proof of declaring the same as his income in his return and paying taxes. In the subsequent, okay, 70% allowed in the year of incurrence. 30% would have been disallowed. In the subsequent year, the 30% will be allowed. Non-resident ku resident ku, what is the difference? Non-resident 100% disallowed. In the year of submitting proof or rectifying default, 100% allowed. Resident 70% only allowed, 30% disallowed. That 30% gets allowed in the year in which you are rectifying the default. Okay. Director sitting fees without deducting tax at source. When I am doing the question, I will again repeat it. Okay. Director sitting fees. Director sitting fees ku nama 194J la nil. Threshold limit 0. Threshold limit is 0 in 194J. Fully it is tax deductible. So if you have not deducted tax, 70% will only be allowed. And in the year in which you are rectifying the default, claim the remaining 30%. Claim the remaining 30%. Payment made to a non-resident outside India, and the said payment cannot be regarded as income in India. Maruti Suzuki case. Maruti Suzuki case, where your payment, the payment I am making to a non-resident, for him it is not treated as income. For the non-resident, if it is not treated as income, I am not liable to deduct tax. I can claim it as deduction. I can claim it as deduction. Employer contribution to PF paid exactly on the due date, allowed. Employer contribution on PF exactly on the due date, allowed. Employees contribution to PF. Employees contribution to PF paid exactly on the due date as per section 139. My dear friends, employees contribution should be as per the due date of the respective law, PF law. If it is not paid within that date, that should be treated as income. That should be treated as income. Section 36, read along with section 224. Now the Finance Act 2021 has already amended that change. So, this income treat pannum. There is a case law also, Gujarat Trading, Gujarat Road Transport. Alternative case law was available. Now you need not write alternative case law because Finance Act has been amended. From the next year, when you are when you are all as a chartered accountant, you will see that as the Finance Act. So, idu vandu income. This will be treated as income. Income, interest on term loan paid after due date are accounted on accrual basis. 43B. So, it will be allowed only in the subsequent year. Due date kulla pay pannala. It will be allowed only in the subsequent date. Provision for gratuity is never allowed, whereas actual gratuity paid will be allowed. Actual gratuity paid will be allowed. Payment to a resident transport operator on a single day. For him, 35,000 is the limit. 10,000 illa, 35,000. Amount paid for purchases directly from growers of coffee, agricultural sector. So you can pay even cash. You can pay cash, agricultural sector. Waiver of term loan by bank for machinery purchased. It is for purchase of machinery. So it should be adjusted with the cost of the machinery. It should be adjusted with the cost of the machinery. Waiver of interest on such term loan. No adjustment. Because in the year of incurrence itself, you would not allow no adjustment. Waiver of working capital loan is an income. Waiver of working capital loan is an income. Details of plant and machinery, opening WDV, additions in less than 180 days, depreciation for all other assets. Okay, okay. This is one of the finest question which is going to give you PGBP to a larger extent. You are working along with me so that we are clear with regard to the various notes. Okay, I know again, sir, will such type of question come? I'm not saying these type of questions come, but these type of adjustments are very popular. Okay, first, sir.
Sir, that employee contribution, should we mention any section or mention Gujarat Road Transport Corporation?
Sir, Gujarat Road Transport Corporation is sufficient, sir, as of for your examination.
Sir, should we also mention about the Ticha sugars also?
Manda, sir, Manda, mention Panadinga because the law is amended. By the time you are writing the exam, the new law has come into picture. So don't even mention, sir.
Thank you.
Working note, depreciation for plant and machinery. Do it along with me, please. Particulars. 1920, 2020. 1920, 2021, 21, 22. Opening WDV 21,40,000. Additions less than 180 days. 1740, 1180, 17 lakh, 1,80,000, 12,50,000. Please understand. Please understand. Adjustment. Term loan waived. Term loan waived. இதுக்கு ஒரு கேஸ் லா இருக்கு. இப்போ உங்களுடைய புக்ல இல்ல. ஓகே. நம்ம இன்க்ளூட் பண்ணிருக்கோம். பட் Steel Authority of India Limited. SAIL. Okay. Term loan which can be identified with an asset. If it is waived, then the waiver should be adjusted with cost of asset. Then the waiver. Sale case law, it is very clear. You need not write the case law, but okay, because it is not there in your present case law. Okay, so waiver of term loan 1,40,000. Okay, waiver of term loan, my dear friends, 1,40,000. Okay, so now year wise I will go. Okay, less depreciation. Okay, my dear friends, 21,40,000 into 15%, non-manufacturing, so no additional. 17,40,000 into 7.5%. Okay, my intention is not to make you understand depreciation in this question. My intention is to make you understand that small term loan waiver, etc. So that's why I have not taken complicated this question. Okay, closing WDV, which becomes the opening WDV of the next year. Which becomes the opening WDV of the next year. Okay, the depreciation will be this minus 140 into 15% plus this into 7.5%. Okay, 5,81,775. 5,81,775. Repeating, 34,28,500 minus 140 into 15%, 1180 into 7.5%. Okay. My intention is not to make you understand the depreciation part. I know you can work out depreciation part. My intention is how that term loan should be. Example, you have to reduce the asset value. Suppose if they have already charged depreciation, reverse the depreciation. Reverse the depreciation. The first question, Lalita Divya question, we reverse the depreciation for that mobile phone purchase. We reverse the depreciation of more than 180 days, less than 180 days, but they charged for the whole year. So reversal of depreciation. Here we are only computing. Okay. Total depreciation. Year wise I am saying 451,500 plus for all other assets the question itself has given 3,10,000. 581,775 plus 272, 2,72,000. 676,759 plus 3,11,000. Okay, this is the total depreciation. Remember it, later we will use it. Computation of total income. Friends, together we are doing it. Remember, together we are doing it. Computation of total income.
Sir?
Yeah.
Sir, is that term loan and working capital loan in the nature of trading liability?
The term loan is not in the nature of working. Sorry. Term loan is not in the nature of trading liability. Term loan is for machinery or assets. Working capital loan is in the nature of trading liability.
So if it is only given waiver of term loan instead of for a particular asset, then what is the charging section for that?
There is no charging section. You will just write a note and leave it. You will just write a note that this should be adjusted with the respective cost of the asset. You cannot take it as income.
No, sir. I'm saying in cases other than for purchase of an asset.
For what? They will not give you term loan, right? By nature, term loan should be associated with something.
I mean, other than asset purchase.
For example, எக்ஸ்போர்ட்டுக்குலாம் டேர்ம் லோன் கொடுக்க மாட்டாங்க. ஏதாவது ஓசிசி இல்ல பில்ஸ் அந்த மாதிரி தான் இருக்கும் ராஜா. டேர்ம் லோன் will be associated ராஜா. Don't worry. Profit. Okay. As provided. 2314. 2190. 3414. Less allowed expenditure. We are saying what are all going to be allowed. Less, add income. Add, first we will complete income. Add income. When I go down, I see employees' contribution not deposited within the due date under PF law shall be treated as income under, okay, Gujarat Road Transport Corporation. Our friend was asking, Kitcha Sugar case law, the employee will also be together with the employer. Should I write the alternative case law? No, because the law itself is now amended. When you are writing the exam, the new law is in place. That is Finance Act 21 has amended and said this is income. Okay, so you can be sure of that you need not 64, 70, 70. Okay, then waiver of working capital loan, or in other words, trading liability. Waiver of trading liability, 72,000. I will write here, waiver of interest will not be treated as income, as the same would have been disallowed in the earlier years under 43B. Waiver of interest will never be treated as income because the same would have been disallowed. Whatever is allowed will only be now taken as income. Okay, right? So revise the net profit. Revise the net profit. Less allowable expenditure. Okay, less allowable expenditure. The question will give you a lot of clarity on PGBP. Okay, on how what is allowed when. Payment to a non-resident without deducting tax. Payment to NR without deducting tax is allowed in the year of incurrence and allowed in the year in which NR submits proof or the default is rectified. So, first year you cannot claim it. First year you cannot claim it. In the next 2 years, 76 and 84 can be claimed. This is 76 pertaining to 1920. This 84,000 pertains to 2021. It can be claimed only in the subsequent years, not in the year of incurrence, because you have not deducted tax, and the proof will be obtained only after the year is over, and only in that year you can rectify it. Okay, right. Payment to resident without deducting tax and the year of rectification. Payment to resident without deducting tax. 70% of such payment will only be allowed in the year of incurrence, and the balance 30% allowed in the year in which default is rectified. So 70% in the year of incurrence. Suppose first year 1,24,000 into 70% into 70%. 1,24,000 into 70%. Okay, I'll not put minus here. 1,24,000 to 70%. Second year, look at the beauty. This 1,40,000 into 70%. This 64,000 into 30%. This 1,40,000. Okay, 1,40,000 into 70%. Okay, 1,40,000 into 70% plus the other 64,000 into 30%, because 70% would have been allowed earlier, so 30%. And the third year 2 lakh into 30%. So மொத்தமா எல்லாமே allowed பாத்தீங்கன்னா 2,64,000. இங்க 124 plus 140 பாத்தீங்கன்னா 2,64,000. But it is not allowed in the respective year of incurrence. It is allowed 70% in the year of incurrence. The balance 30% in the immediate subsequent year you have. Right? Next. Salary paid to a director without deducting tax at source. Director later submitted proof like the same one, like the other one. Okay. Payment of salary to director without deducting tax. 70% of such payment in the year of incurrence. Balance in the year of submitting proof. In this case, submitting proof. So what happens? 12 lakhs into 70% first year. Next year, it is 12 lakhs because you have submitted the proof. Where 70% of 12 lakhs plus 30% of 12 lakhs. So I am writing 12 lakhs. Okay. Conceptually, it is 70 and 30. So I am not writing it as 70 and 30. Okay. Sir, why is the cost of construction 32 lakhs? Why aren't we disallowing those expenses in the year of incurrence? So why aren't we allowing those expenses in the year of incurrence before allowing in subsequent year? Or is it already disallowed in the net profit? No. The question itself is net profit before adjusting. So we are only doing the adjustments. நாம தான் allow பண்றோம் இப்போ. The question is not net profit after adjusting, after the debit or credit or various things. Okay. The question itself is before adjusting. So we are only going to adjust it. That's why, my dear friends. That's why. Okay. Right. Directors sitting fees without deducting tax at source. Directors sitting fees. 70% is only allowed as tax is not deducted at source. I take this opportunity to write this also. Okay. Under section 194J, directors sitting fees, the threshold is nil. So there is no threshold. The threshold is nil. So in the first year, 18,000 into 70%. In the next year, 22,000 into 70%. In the last year, 18,000 plus 22,000 into 30%. That is the year in which I got the default rectified. So total pathina, you will get it as 40,000. Okay, that is nothing but 18 plus 22. Year of allowing is different. That's all. Okay, right. Payment to a non-resident outside India and the said payment cannot be regarded as income in India. Okay, in Maruti Suzuki case, it is held where the payment is made to a non-resident which is not regarded as income in India. The same is not liable for tax deduction. A similar judgment in Viscraft International. Okay, Viscraft International. There are two cases. One is Maruti Suzuki, which also says the same that you need not deduct tax at source. Another is Viscraft International. When it is not, this is the exhibition conducting organization. When it is not regarded as income in India, there is no liability to deduct tax at source. So, 1,50,000. employer contribution to PF exactly paid on due date. Employer contribution paid on or before due date is allowed as deduction under section 43. So you will allow it 70, 78, 80, 70,000, 78,000, 80,000, 70, 78, 80. Employee contribution already we have done. Interest on term loan paid after due date. Okay. Interest on term loan, since it is paid after due date, according to section 43B, it is allowed only in the year of payment, not in the year of incurrence. Not in the year of incurrence, it is allowed. It is allowed only in the year of payment, not in the year of incurrence. So, in the 60-60, in the subsequent years only you can claim, not in the year of incurrence, because section 43B, it should have been paid before the due date. It should have been paid before the due date. Provision for gratuity never allowed. Actual gratuity paid at the payable at the year end, but paid after the, for gratuity you can pay anytime. Actual gratuity paid or payable. Provision is disallowed, so this is allowed. 54, 111, 116. 54,000, 1,11,000. If it is doubt after the question is over, I will take it up. 1,16,000. Payment to resident transport operator. Resident transport operator, okay, according to section 40A subsection 3, the limit is rupees 35,000 per day instead of rupees 10,000. Okay, so in this case it is not allowed because it exceeds 35,000, so not allowed. But in the third year it is allowed 27,000. In the first year it is not allowed because it has exceeded 35,000, whereas in the last year it is allowed because it has not exceeded. Okay. Amount paid to agriculturist. Okay, rule 6 DV exception for 48.3. Okay, this is rule 6 a. So you can pay 78,000, 66,000, 78,000, 66,000. Term loan, oh, term loan we have done. Interest, no adjustment. Working capital. Allowable depreciation, total allowable expenditure, taxable profit, nothing but revise the net profit minus allowable expenditure. Revise the net profit minus allowable expenditure. Revise the net profit is 2404 minus the second year loan, you have a loss Just check it out. I'll answer the questions.
Sir,
Yes, sir.
sir, gratuity is a 43B item, right, sir?
Leave encashment is only told in 43B. Employer contribution to PF, employer contribution to gratuity fund, these are said. Employer directly paying to employee, it is still a doubt, it is still not specifically said, so it is allowed.
This actual
If I have to contribute to LIC gratuity fund, then it should be within due date. It is not towards a fund or other things. Of course, I understand it is a statutory liability, but not mentioned in 43B. It is like electricity payment. It's a statutory liability, but not mentioned in 43B.
Sir, this actual gratuity payable at the year end, but after due date, how are we allowing it as an expenditure?
Because provision for gratuity is never allowed as an expenditure. So actual gratuity paid will be allowed as an expenditure.
But it is after due date of return filing. No,
that's
sir.
what I'm saying. The statutory payment does not. What are all the statutory payment? 3 to government. Okay. Employer contribution to PF, payment to railways, any taxes duty. 2 to employees, leave encashment, bonus, interest to financial institutions. So it does not cover gratuity, so it is allowed. Whereas if it is the gratuity payable to any life insurance corporation or other thing, it will fall under that employer contribution. So this is still an open area. That's why it is allowed.
Excuse me, sir.
Listening?
Sir, yeah, you were explaining about waiver of term loan and you will be reducing it from the value of the asset.
Yes.
Also, you were explaining about the reversal of depreciation. Can you explain that again on reversal of depreciation, what is already charged?
Yeah, I can. Okay. Let me take up an example. Suppose net profit after charging depreciation comes to 10 lakhs. And there is an adjustment which says, okay, there is an adjustment which says term loan of rupees 3 lakhs for purchase of machinery has been waived by bank. So what happens now? Okay, this 10 lakhs I have taken after adjusting all items, this 10 lakh is there. Now this 3 lakhs has to be adjusted with the machine value. After that only depreciation should have been computed. But I have computed before adjusting this 3 lakhs. So what I will do is reversal of depreciation 3 lakhs into 15%. Because this has been, actually my depreciation should be less by 45,000. It is more by 45,000 because I have not adjusted this term loan. If they have adjusted, no problem. If they have not adjusted, when you make the adjustment, you have to reverse the depreciation also. That's what I mean.
So, sir, this will only come when they have given us the depreciation amount. Because when we calculate...
Yes. Not that when we are computing. When they have provided everything and given to you, then we have to make this adjustment.
Thank you, sir.
Okay, so that covers 40, 40A2, 43B, 40A3, all those things in a way we have covered. When we do the comprehensive, we will again look into all these things. Question number 7. Venkat Varadan provides you the following details. Compute his income and tax are payable, assuming he has not paid any advance tax and is ready to file it in June 2021. Okay, the question itself is presumptive taxation and assessment of individual. For presumptive taxation, only the last installment of advance tax is payable. he need not pay the first 3 installments of advance tax. For an assessee who is opting for 44 AD, ADA, AE, only the last installment of advance tax is payable. His retail business turnover 1.5 crore, has not opted for presumptive taxation. His expenses from the business 135 and depreciation 10 lakhs. He failed to maintain books. Now he has no other option but to opt for presumptive taxation. Because 1.5 crore is a tax audit limit. If books are not there, tax audit cannot be performed. So presumptive taxation is the only option. He is also a consultant engineer, gross receipts 21 lakhs. He owns 5 cars and 1 HCV of 16,000 kgs for whole of the year. He has not maintained book. However, due to maintenance, HCV was not in use for 3 months during the year. Venkat has purchased the electric vehicle for his personal purpose at a cost of 11 lakhs. And coming to 80 EEB, electrical vehicle, 150 you can claim. Loan was obtained from State Bank to the extent of 8 lakhs on which 8% interest is payable. For the balance, he took a loan from his friend at 10% interest. Brought forward loss of retail business and unabsorbed depreciation. Retail business. Since books are not maintained, 44 AD is the option. Gross turnover 1 crore 50 lakhs. Income at the rate of 8% on gross turnover. If they have given that all income are received by electronic transactions only, take 6%, otherwise take only 8%. 12 lakhs. 12 lakhs. Okay. All expenses are deemed to have been allowed. Okay. All expenses under 30 to 37 are deemed to have been allowed. Since the term is all expenses, even okay, unabsorbed depreciation is deemed to have been allowed, because it is said in section 32, even unabsorbed depreciation is deemed to have been allowed. You cannot claim this 150 separately. You cannot. This is deemed to have been allowed. This is deemed to have been allowed. You cannot claim it separately. Okay, so only brought forward business loss can be claimed. Okay. Income from profession, section 44 ADA. Gross receipts. Gross receipts from profession 21 lakhs. Income at the rate of 50% of gross receipts. Flying of goods flying of vehicles. Section 44AE. Section 44AE. Okay, 5 cars. For cars, okay, it is 7,500 per month per car. So 7,500 into 5 into 12. Okay, for HCV, rupees 1,000 per ton kg. So 16,000 into 12. Okay, under presumptive taxation, usage period will always be 12 months. Okay. Date of usage, how many months, 3 months it has remained idle, all these things does not matter. So I expected the change for financial year because 5 months of lockdown, no vehicle could have been moved last year, but this change was not there. So 16,000 into 12. Gross total income 2792. Okay, deduction under section 80 EEB, electric vehicles. Actual interest payable to a very important financial institution. Personal loans you will not take. So it will be 8 lakhs, please 1 0 is missing, 8 lakhs at the rate of 8% for 9 months. 1st July is the date of purchase. 1st July is the date of purchase. 8 lakhs into 8% into 9 by 12. Maximum limit 1,50,000. So whichever is less is 48,000. Okay, whichever is less is 48,000. Total income. Okay. Amendment based question, that is, I am more talking about section 43CA. அது என்ன section? 43CA, 50C, 56 to 10 had the same amendment. The percentage is 10%. The tolerance limit is from 5%, it is increased to 10%. That is the amendment related question I am taking up. Okay. Hurry Limited, a company engaged in the business of construction, provides you the following particulars: compute the taxable income and also work out the optional tax regime. Don't worry about optional tax regime, I will tell you. Net profit as per P&L account after debiting or crediting the following: 77,25,000. Three major sales took place during the year under consideration. The following are the details. Sale 1, sale consideration, stamp value on the date of registration. Sale 2, sale consideration, stamp value on the date of registration, but the advance is received, so stamp value on the date of agreement. Sale 3, sale consideration, stamp value on the date of registration, advance received through approved mode, stamp value on the date of agreement. Dividend received from subsidiary company 2645. Dividend declared in the annual accounts paid in August of the assessment year, debited to P&L. 80M, you will get 80M deduction, 23 lakhs. Interest income received from REIT in respect of which investment is made. Interest income is taxable in the hands of the ultimate investor, so in our hands only taxable. Rental income received in the from REIT in which the investment is made. Rental, dividend, interest, rent are pass-through status. Dividend anyhow exempt if it is from an SPV. Interest, rental income ellame pass through, whereas STCG received from REIT in which investment is made, STCG in which investment is made, my dear friend, that does not enjoy the pass-through status because it is taxable in the hands of REIT. It is going to be exempt in the hands of the recipient. Contribution to National Lab for Scientific Research. Good question. ஓகே, ஒரே ஒரு சின்ன இது டைப் படிக்கும்போது மிஸ் பண்ணிட்டேன். அட்வான்ஸ் ரிசீவ்டு த்ரூ நாட் அப்ரூவ்டு மோட்ஸ், அதுதான் என்னுடைய இன்டென்ஷன். பட் you all can understand that I control C control V did and did not put that not. I will put it here. Okay, so question number 8. Yeah, first I'll do business income. Net profit as per profit and loss account. Net profit as per profit and loss account 77,25,000. 77,25,000. Add 43CA adjustment. Okay, add 43CA adjustment. Okay, so it should be 43 when how the house. Okay, right. Sale 1, actual sale value, how much is that? 2,44,10,000. Okay, stamp value on date of registration, advance not paid. Okay, 2,91 lakhs. 110% of actual sale value. 110% of actual sale value comes to 2 crore 68. Okay, right? Since stamp value exceeds 110%, only stamp value should be taken as sale value. So adjustment என்ன பண்ணும் 2 crore 99 minus, okay, they would have taken only 2. So this amount has to be increased in the income. Okay, since the stamp value exceeds 110%, difference between stamp value and sale value should be treated as income. Section 43CA. Section 43CA, difference between these two should be taken as income. Sale 2. Okay. Okay. Actual sale value 1 crore 39 lakhs. Stamp value on the date of registration, stamp value on the date of agreement தான் நமக்கு வேணும். Okay, stamp value on the date of agreement, since advance is received through approved modes. Since advance is received through approved modes, 1 crore 62 lakhs. Okay, 1 crore 1 crore 45 lakhs. Sorry. Okay, since stamp value does not exceed 110% of actual sale value, okay, no adjustment needs to be made. No adjustment needs to be made. Okay, let it be as it is. No problem. I'll work it out as it is. I'll work it out as it is, friends. Okay, let it be as it is. On the date of agreement itself, advance received through approved modes name to 2 crore 25 lakhs. Because I'm confident you know the overall concept, that is sufficient. That is sufficient. One minute. Okay, okay, right. Now going through dividend from subsidiary company taxable under IFOS. So it is 2645. dividend declared not allowed as deduction. They have debited it to P&L, so we need to add it back 23 lakhs. 23 lakhs. Okay, I'm only computing business income now. 23 lakh. Interest from REIT taxable under IFOS. Interest under REIT taxable under IFOS 11 lakhs. Now understand this. This was earlier done in a question in CA Institute itself. Rental income. Rental income from REIT. From REIT. Since the company is in construction business, since the company is in construction business, letting out of properties will be taxable under PGBP. Hence, it will not be considered as house property income. Okay, Chennai properties and investments. CA Institute has done this adjustment once. 2018 May or 2018 November, they have done this adjustment like this. Okay, I initially thought, but since it is construction industry, they are asking us to take this adjustment amendment. So please don't, if at all same things repeat, okay, please consider rental income from REIT by a construction company. If it is not construction company, house property. If it is construction company, take it as business income. Take it as business income. TCG from REIT, okay, exempt in the hands of the unit holder since it is taxable in the hands of REIT at MMR. So they would have taxed it. So it is exempt here 10,50,000. 10,50,000. Contribution to national lab only 100% allowed, they have debited. Okay, contribution to national lab from FY 2021, from FY 2021 only 100% is allowed and it has been debited. No adjustment required. No adjustment required. So taxable business income. Taxable business income. $99,20,000. 99,20,000 taxable business income. Computation of total income. Business income 99,20,000. Other sources, dividend income from subsidiaries. Dividend income comes to 26,45,000. Interest from REIT 11 lakhs. Gross total income. Gross total income 1 crore 36,65,000. Deduction under section 80M for the dividend declared and paid. Okay, dividend received is 26,45,000. Dividend declared and paid within 30th September, 1 month prior to the due date of filing returns. Okay, 1 month prior to the due date of filing returns, 23 lakhs. So whichever is less is allowed as deduction. Whichever is less is allowed as deduction. Total income.
Sir,
Listening?
sir, this rental income from REIT, I am anyway only a unit holder. Then how does it matter for me whether I'm a construction company or not?
Because yeah, it doesn't matter. Okay, the rate of tax is going to be the same. That's what you are saying, right?
No, sir. Why should I take it as
Because
PGB?
the income will be in the same nature in which the in between entity distributes. Why you
Oh,
saying this STCG is not taxable and you are reducing? Because the REIT has paid the taxes for this. So income will be in the same nature in which the distributor got it. So that's why it is important.
right, sir.
Also work out the tax and compute the total income, and also work out the tax under optional tax regime. Computation of income under section 115BA8. Computation of income under section 115BAA. That is the optional tax regime. That is the optional tax regime. Existing net profit. Same adjustments will come with some difference. Existing net profit 77,25,000. Adjustment to income due to 43 CA. Same needs to be made. Adjustment in income due to 43 CA 46,90,000. 46,90,000. Okay. 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 All these things remains to be the same with addition like this. All these things. Contribution to national lab. Okay. Section 35 deduction will not be allowed. Section 35 deduction will not be allowed. So this 2,10,000 will increase. This 7725, 4690. My dividend income will tax it under the, okay, all these things. This 210 will be the difference. This 210, you can even take this answer and start working. 9920 as an answer and start working. Okay, so here the business income will be, here the business income will be 1 crore 1,30,000. 1 crore 1,30,000. Nothing but 9920 plus 2,10,000 plus 2,10,000, because the 2,10,000 is not allowed. Is not allowed. All other provisions. Okay, no other capital expenditure is claimed. No additional depreciation is claimed. So no problem. Okay, income from other sources the same. Okay, income from other sources also the same. Okay, 2645 plus 11 lakhs. Income from other sources also the same, giving me a gross total income giving me a gross total income of, okay, 1 crore 3975, 1 crore 38 lakh 75,000. Remember, deduction under chapter 6A cannot be claimed except 80 JJA and 80M. You can still claim 80M. The amendment of the act is 80M can also be claimed. 80M can also be claimed, my dear friends. So there is no restriction for claiming 80M. Okay, so 80M deduction will be the same amount which we have claimed, 23 lakhs. Okay, income under optional tax regime. Income under option, you can still claim that 2,10,000 தான் difference வரும் உங்களுக்கு. Okay, 2,10,000 தான் difference வரும். So this is more beneficial now because when I work out the tax, at the rate of 22%. Surcharge at the rate of 10%. HEC at the rate of 4%. Total tax under optional regime, total tax under optional regime will be 29,13,196. And the turnover kudukala, adnala I have not worked out there. I mean, kudukala another particular, because I want you to understand the difference in optional. Though in assessment of companies I will do optional tax regime, but I want you to understand how it changes. So this is the income under optional tax, or this is the tax under optional tax regime. Same working only, that 210 is not allowed, 80M is allowed. Okay, 80 JJAA and 80M are allowed even under the optional tax regime. This is about the 44AB amendment. That is that 5 crores. That is that 5 crores, the amendment. Okay, right? This is about the 44AB amendment, and followed by that are the questions generally, that is from the examination perspective, some 2-3 questions has been added. Okay, I have a small thing to you. Kindly try it. You need not tell me the answer. You need not do anything. Okay, take it as a small, take it as a homework exercise. Kindly try these questions. Kindly, when you try these questions, you will get a better perspective of it. Okay, wherever you are stuck, I will also work out the answer in 1.5 hours and paste it. Okay, wherever you are stuck, you can just text me at that time, or you can just verify the answer. Absolutely no checking. I am not going to ask you what is the answer, anything. Okay, I want you to try. By doing this 3 or 4 questions, you are becoming stronger in PGBP. This evening when we do assessment of firm, you will become more stronger in PGBP. If PGBP is stronger, that itself will give you 50% confidence in the examination. By you becoming strong in PGBP, you will get 50% confidence. Please sit as it is. After having a small snack, please continue to do the, okay, dedicate these days to taxes. We will meet again at 6 o'clock today evening, friends. Same link, no new link, same link. We'll continue with assessment of firms. Thank you very much.